I'm kind of pitching myself here as somebody who's an experienced investor, but always, I'm definitely new to this business as well. I just want to speak about this product and just how much, it has really helped me, propel myself, get better with talking with sellers, actually be able to close a deal. My strategies right now have been primarily direct mail, cold calling, and cold texting, and I've found a lot of success with Real Estate IQ, especially being able to get in front of customers, have engaging conversations, and of course, I'm hoping to use all of that to build my own business and eventually retire off.
Excited to be here, and I want to say a big thank you to Real Estate IQ. They have the absolute top leads in the industry and just make investing effortless for all of us as real estate investors here in Texas and obviously everywhere else that they're focused. And I'm proud to be associated with Real Estate IQ. Love what you guys do and love how you all help investors so that we can focus on the thing that makes us the most money, which is the job of real estate investing.
I wanted to jump on this morning and give a shout out to Real Estate IQ. I began my journey with them a few years ago, just using some of the more basic products, the off-market leads. And since then, growing and visiting and talking with not only Steve, but other people who are involved with Real Estate IQ, I've had the opportunity to actually not only be a client, but I also became an investor with them. And that is one of the beauties of being able to be part of Real Estate IQ, is it gives you the opportunity to grow as an investor, especially in real estate.
I'm kind of pitching myself here as somebody who's an experienced investor, but always, I'm definitely new to this business as well. I just want to speak about this product and just how much, it has really helped me, propel myself, get better with talking with sellers, actually be able to close a deal. My strategies right now have been primarily direct mail, cold calling, and cold texting. And I've found a lot of success with Real Estate IQ, especially being able to get in front of customers, have engaging conversations. And of course, I'm hoping to use all of that to build my own business and eventually retire off.
Excited to be here, and I want to say a big thank you to Real Estate IQ. They have the absolute top leads in the industry and just make investing effortless for all of us as real estate investors here in Texas and obviously everywhere else that they're focused. And I'm proud to be associated with Real Estate IQ. Love what you guys do and love how you all help investors so that we can focus on the thing that makes us the most money, which is the job of real estate investing.
I wanted to jump on this morning and give a shout out to Real Estate IQ. I began my journey with them a few years ago, just using some of the more basic products, the off-market leads. And since then, growing and visiting and talking with not only Steve, but other people who are involved with Real Estate IQ, I've had the opportunity to actually not only be a client, but I also became an investor with them. And that is one of the beauties of being able to be part of Real Estate IQ, is it gives you the opportunity to grow as an investor, especially in real estate.
Hello, welcome. And it's Thursday again, and we have a whole set of new updates for you. New market updates, deals updates, right? Every day, every week. There's a lot of stuff happening, so I want to share with everyone kind of the updates and also the case study of some of the deals that we were able to put under contract. And then for today, we have our really cool special topic, which is about reading and understanding the market update data. We're sharing the update data every week. So how do we interpret that, and how do we apply it to our investing business? That's something that we get asked on all the time, and so a little bit of training on how to read that data and really understand not just the overall national market, but also the market, your local market, and if you're actively doing the deals, the understanding the neighborhood, right, and understanding the numbers that's going to drive your buying and selling in that particular neighborhood. It's going to be very applicable too. So without further ado, the introduction on our host organization is Real Estate IQ, a slew of different solutions to help you build and grow your real estate investment business. And we always say that everything in your business starts with a lead and deal flow, right? When you have deals, then you have a business. If you don't have a consistency and prediction of how many deals and how many kind of lead opportunities I can pursue, you really are just kind of you're starting up, right? You're starting up. You're trying to build that consistency. So the best core product is the off-market distress seller leads, where you get fresh leads sent to you basically every day, and it's mined for you. You can do it yourself too. It's just a lot of labor-intensive work, and I find that when I'm mining the information myself, I don't have time or energy left to do the marketing and seller approach, which is the more valuable activity in our business. Okay, so if you're curious, about this, we have a QR code for you to see what it's about. And I just want to share with you that this year we have a new website design where we share breaking real estate investment news and insights. So a lot of the market update that you see on a weekly basis here live, you will also get a summary on the website as well. And then we also have featured deals, which is always something that people want to see. And actually we got a couple of active deals right now. So if you are, in the market, you're looking at deals, that could be something for you. So we're gonna skip over success stories, right? Reminder that everything we present here is, case by case basis, and also it's for educational purposes only. Every deal is different. Due diligence is different. Every deal is kind of complicated in its own way, and so just want to highly recommend that you make the best decision on a deal-to-deal basis. We don't offer investment, financial, or legal advice. If you need help closing a deal, you got a hot lead, you can share it with us. We can analyze the deal for you and give you some recommendations. Okay, so that concludes our introduction. We're right on time. We're going to dive into the next piece, which is market updates. And then we'll have our feature topic, like I said. It's about understanding the market update data. And then, for those of you that have questions, I want to really encourage you asking any questions you might have come up regarding the deals or the topic. And then we'll close and share with you upcoming classes and events, which you should attend. Just really maximize what you gain from this platform. Okay, so our kind of 5-minute market update. So while we are pulling that up, okay, you can look at the slide here. So in Texas statewide, the market is returning into more of a balanced market. Okay, so we always look at whether the market is a buyer's market or seller's market. We're seeing that with mortgage rate getting into the 6%. Some lenders actually quoted under 6% range now, and the home price growth average. There's a forecast from Texas A&M that's projected to be about 2.5% in terms of price growth. And each market, right? So different metro market have a different growth numbers. So on average, we're looking at 2.5%. DFW, we're looking at 3%. Austin around 2%, and Houston and San Antonio at 1.5% price growth. And for DFW, kind of diving in here, the market has stabilized. We're seeing median price has gone down year over year 2.8%, and that's 4.5% below the 2022 peak. And as we all know, 2022 is when we had historically low interest rate, so that drives the price high and demand much higher. Current weekly stats, we're looking at 1,710 new listings. There are 2,000 listings that have price reductions. 1,211 closed sales. So a lot of stuff happening in the DFW area, and it has stabilized instead of further decline. And then a couple of additional items in the San Antonio market and high-end segment. So San Antonio, we're seeing a median price jump of 31,000 week over week, which is kind of shocking number. And also in the luxury. So another comment to make is that in that kind of mid-market price range, there's a lot of active buyers. If the homes are priced correctly, there's a lot of activities there. And then Texas-wise, the whole state-wise, if we look at the $1 million home sales, there's actually a record number. Over 14,418 properties closed in the past year, which is a 12% increase and the highest count on record. So it was a record year for the luxury price points. And so there are kind of two interesting markets for investors. One is the mid-price segment, right? There's a lot of activities there. People are more price sensitive. And then the luxury side we're seeing record transaction volume in the key metro area. Okay, next, let's talk about some deals updates. By deals, we're gonna go over some leads and kind of new deals, and then we'll also talk about the current projects that we're working on right now. So this is a lead. It is not under contract yet. We don't have the photos available. But look at these numbers. This is where only a sub-2 transaction would work. And we have a training on sub-2. We call it the MAP process. I really kind of talk about the details of how to make a transaction like this work. If you look at the numbers here, right? So we always say that when it comes to a sub-2, real estate can be a little bit of financial engineering, which is why we believe financial literacy is so important to kind of grow as a real estate investor. So this house, it's a pretty much a new build, right? It was built in 2024, and because it's a new build, for the first couple of years, it's kind of underwater. So if you see this, the after repair value is 280. The balance is 286. So it's already owing more than how much it's worth today. All right, so that's a big challenge. And then another challenge is there are some second liens. There are 2 second liens that total a little bit over $10,000, along with the cost of reinstatement for $39,000. Right, no major repair. That's a good news. So how do we make something like this work, right? So this is where subject to would be the only way to really help out a seller like this. So so there are three options for the seller, right? Because they're already underwater. One is they let it go and let it go to foreclosure. And the consequences for the seller or the owner is that they're going to lose the house. Their credit is going to get damaged for like 7 years. And also, if during the foreclosure, right, the sold price is less than how much is being owed, then the bank or the lender they may pursue a deficiency judgment and kind of go after the owner. And so a lot of times they have to consider bankruptcy proceedings and all that. So it's, foreclosure is a kind of worst case scenario for them. The second one is a short sale. So a short sale means getting the property bought by somebody for less than how much the amount is owed. So it's kind of like, from that standpoint, it's similar to a foreclosure, except foreclosure only happens during that auction, right? Foreclosure auction day. here we are applying and are getting the lender's specific approval to accept less than how much is being owed. And so with that said, with a short sale like this, then we're gonna need to run a 70% rule minus repair. Good thing is there's no major repairs. So the most we can offer at 70% of ARV is, let's see, 280 times 0.7, 196. So the lender will have to accept $90,000 less than the mortgage balance, along with kind of forgiving the reinstatement fees and everything. So that could be some lenders may say yes, okay, I will approve it to prevent further loss, because lenders prefer to not hold real estate assets. If they foreclose, they may incur further loss. So short sale can be favorable for them if they decide to approve, but not all the time. So that's still a good option, a possible option. So the consequences for the owner is that their record is got their credit record is going to stay on their credit record for 2 years, and then they walk away, wash their hands, and then they start over. So it could work if the bank decides to approve the short sale, and if they don't, then it goes to foreclosure. Okay, and then the third option is a subject to, where in this case we offer to take over the payment, and then if you kind of look at it from a cash flow standpoint, we got co-living and short-term rental, where the cash flow could possibly make this a viable transaction. Okay, so the cash flow could work. But then the reinstatement is what, it's kind of a huge amount. It's more than 10% of, how much a house is worth. So in order for this to work, we'll need to work on the refinance first, and then, kind of work the creative finance angle. Okay, so I hope that makes sense. And I kind of broke down the sub-2. This is the example where without a sub-2, there's no good solution for the seller. And so this is where a sub-2 deal could work. Okay, here is another one in Waco. So no major repairs. And what we have here is also kind of a creative finance type of solution, right? Sub-2 is creative finance. So the after repair value is 175. The owners, they don't want to take a 30% discount, right? If they take a 30% discount for a cash offer, they're gonna be operating at a loss, and they don't really want that. So they prefer to accept this kind of creative offer. So what this is, the seller gets some cash. Oh, by the way, for the sub-2 deals in the one that I presented earlier, for a sub-2 transaction, we can also create some cash to the seller as well because of the creative solution, creative finance solution. Okay, so here, out of the 170,000 purchase price, right, 5K is cash and the rest is financing based on the current mortgage and owner financing the equity. Everything adding up, the monthly payment is 807. Now, a potential exit for a wrap would be a wrap where, we can potentially sell it at 10% of the after repair value, or 10% of the market value. Take a bigger down payment. So there's a delta to be made. Bigger down payment and the cash to the seller. And then the rest is going to be at a higher financing. And there's a delta between the monthly payments, right? You can see. and also a delta between the balloon payment. So this would be a way to kind of make a deal that normally is very tight, make that work. And if you want to really understand the details and kind of punch in the math and talk about this in more, looking at this in more detail, take our class on the map, and we'll kind of talk about this in a further detail. All right. Okay. Cool. So that was a lot of numbers that we had to look at. And if it was the first time for you to kind of look at this, right, breaking down, which I didn't really spend the time to kind of break down most of the numbers. The training would do. The training would break that down. But like I said, that was just a lot of numbers, and so let's kind of look at a actual a project and how that's going. I think there are some folks that just love looking at the numbers and making sure the numbers work. We love working with them, and then there are folks that love the actual project and like something you can touch and more physical. We love working with you as well, and I think we all have strengths in different area, and managing projects is certainly not my strength, but I'm happy to kind of share the project progress because we have a fantastic partner in Tamla that's taking care of all of this. So we've been sharing the progress of this, and so overall, this was a first of all, it was an owner financed deal. So Tamla negotiated a really good term for us to acquire the property. And then another very genius thing that she saw is that it was a pretty easy way to divide this house into actually 2 units. So we have 2 income producing units. So one was I think a 3x1 or 3x2. I think it's a 3x1. And then there is also enough room to divvy out a 1x1 unit, 1 bedroom, 1 bathroom. So kind of like it's not a bachelor's pad, but it's like I guess it's a 1x1 studio. No, 1x1 studio, is it? It's a 1x1 unit, apartment unit. And this is the kitchen. Now you can see it's pretty much finished. This is the kind of progress, right? Countertop, everything is now put in there. So now it's ready to be moved in. And this is what the overall property kind of looks like. The main unit is in here. You can see the garage on the left. And then the 1x1 is actually in the back. You don't see this in the front. When I first walked in, I saw that, when you kind of walk in on the pathway, there were 2 doors. And I thought 1 door is for 1 unit, 1 door is for another. No, both doors are for the same unit, the 3x1, the main house. So, kind of the number, from a number side, what makes this a very interesting deal here is that our monthly payment is $11.58, right? And then when you start looking at the cash flow, because now we have 2 units, 2 income producing units, after subtracting the monthly payment, we're netting, and the netting number is actually a little bit less than that because we got property management fees, right? Some utility fees that we're covering and all that. But kind of just simplifying, right? Just subtracting the biggest expense, the income, we're looking at $23.50. So kind of the gross income, I guess, is we're talking. Maybe gross income is not the correct word, so don't nitpick on my terms right now. But we're looking at a really big, really exciting number, which is kind of the monthly. I guess we can call it a monthly cash flow. This is before we subtract all the fees before all the fees of kind of management and certain other costs. But we're talking about probably more than 1,000 a month of cash flow. So that's quite exciting, being able to get it in a term where it makes sense. And then now we're kind of in a position to refinance, kind of get out of the kind of turn the owner finance into a longer term financing, and then kind of continue the cash flow on the property. And ideally, the monthly payment in an ideal world would be a lot less than this, so we're in cash flow better. So that's pretty cool. So if you're interested in joining the game, a lot of times when you see a deal, you need to get funding. It's not quite common that we see a seller willing to do seller finance. So if you want to get funding, you can work with our funding partner Randy. Randy has found funding on all of our deals and making these deals possible. So really good ally to have in your network. And then there are other opportunities that you can kind of get in the game. So we always recommend folks to talk to Randy, because if you want to get into a deal, you need to think about how to fund it. Okay, so a couple of featured deals next. Okay, so this is the Waco deal, right? This is how we can kind of package this into a disposition. So if you're interested in kind of buying this property, right, this is what the benefits, right? No major repair, walking and biking distance to the university. It's a sub-2 deal, which means a lot of financing is already kind of pre-negotiated for you. It is a 5-year balloon, so something to be mindful of. A lot of details we can discuss, but if you kind of look at the cash flow, right, monthly payment 807, long-term rental, co-living, short-term rental, and all that, I think there's margin. Okay, next we have this property in Austin. You might remember that this was one of the deals we got under contract. We're estimating the repair would be about $50,000. Buyers beware. You should definitely check out and kind of come up with your own contractor quote that you can rely on. The main issue is the AC leak is causing a mold problem throughout the house. And if you kind of look at the numbers, right, the after repair is $300,000. Your entry fee is about 10% of that, and then you take over the mortgage, which is very favorable. So there's quite a bit of room here for those that want to do a subject to and flip it. You can also turn it into a long-term rental too. There's probably a play for that to work. It could be a wrap as well. Okay, and then we have a 35 single family home kind of rental. We got some base numbers here. The seller is willing to kind of sell it by one-off basis. So if you just want to buy a few of the properties in the portfolio, she's open to that. She's willing to sell it at about 80% of value. So kind of, when you buy, you can get an instant 20% equity if you do a cash offer, or she's willing to owner finance it as well, as long as you put a significant down payment. So that's something to look into if you are into rental, right? You want to buy something that's already rent ready and already have a tenant in place. I think some of these projects that we've been working on, we have to. It's vacant. We buy it, we improve on it, and then we put a tenant in. So there's a time gap between purchasing to the property cash flowing. Now the numbers still work because we are able to buy at a steep discount, improve it, force appreciate, and then kind of turn it into a rental. And we were able to fill it very quickly. But I think a lot of the landlords, one of the major kind of pain point is keeping the place leased out as soon as possible. And so in this case, you don't have to worry about, getting a unit and having to get a lease. A lot of the units are not vacant, and there's already a tenant in place, or it's already kind of rent ready. So I think particularly it will be for somebody who wants to own more rental properties and maybe build a rental portfolio and have a passive income over time, continue to grow that. What else do I want to say? Yeah, I think that's basically it if you want to grow your portfolio. This is something worth looking at. So the process of this and kind of seeing more details about this property, all these properties, is filling out the form. You scan the QR code here. There's a list of questions that you got to answer. The owner prefers to work with not necessarily, prefers to work with somebody who have already done deals before. And even if you're just gonna buy one or two deals, ideally kind of having experience and knowing what you're looking at and being able to be in a position to pull trigger quickly is something that's valuable for the seller. And so you fill out that form, we'll call you and kind of get to know you, and then we'll send you the information, and then you'll be able to kind of go ahead and see more information about the property, go see the property, and so on and so forth. All right, so it's in the DFW area. If you're interested, fill out that form. Okay, we have more deals in the I guess on our platform. So again, if you're interested in kind of any of these deals, you want to scan that QR code, and then we'll call you and match you with the deals that fit your buy box. Notes as well. So again, really depends on like what you're looking for, and we can match you with the right deals. Speaking of deals, right? We show you some examples of the deals we made. Some fire leads, right? Hot and fire leads. These are the deals that are ready to close, and you just need to put it under contract, or like talk to the owner, negotiate, and put it under contract. And then kind of before that, there's a whole piece of finding the deals, analyzing the deals, and so on and so forth. So we have a set of trainings, kind of geared towards mentoring you, right, on a one-on-one basis to close the deals. You get 1 year of subscription of the motivated seller leads, right? So that's the basis of how you can do your marketing. We'll give you training on how to do marketing, how not to overspend in your experiments and projects until you get a consistent deal flow. We will also kind of match you up with the deals that you're interested in. If you don't want to, right? If you're open to, hey, I want to. So there are a couple of different type of investors. Some investors want to negotiate directly with sellers because that's how you can get the best deal. Some investors just want a good deal. You don't need to directly get to the seller. As long as it's a good deal that fits your numbers, right? You will move forward. So for the second type, we'll also match you with the deals that fit your buy box too, because at the end of the day, we want you to be successful, and we want you to really learn through the activity of applying the training and become a deal maker and deal partner. So, okay, a lot of tractions already. And that's basically what we have on the deal side. I will leave up the QR code here if you're interested to learn more. And now let me pull up our feature topic. I'm going to advance the slide. Feature topic for the day. And I'm going to pull up our feature topic, which is understanding the marketing data. Okay, so let's get started, right? We talk about this market data a lot. We really strongly feel that if we stay on top of the market data, then number one is we consistently understand the trend of how the general market is doing, right, nationally, and in your state and in your local area, how the market is doing. And that's going to help you formulate the right decisions on what to do in terms of real estate, in real estate investments. So on a strategy side, right, it's going to help us formulate that strategy. And then I think in general, it's just good to kind of stay on top of the market. So if the market changes, we can start considering, what actions we need to take to adjust to a change, or we can decide not to do any action. That's also a decision, right? A decision to not make changes. But just being on top of it and kind of being the first to kind of, I guess, stay on top of that market, and also being able to make the best decision. The sooner you have the information, the more time you have to kind of let it marinate and make the right decision. I think that's very important. So from a acquisition standpoint, right, you want to know if it's a buyer's market, a seller's market. If you are trying to buy and it's a buyer's market, then you can negotiate better prices. And if you're buying and it's a seller's market, then that seller has more power. You can do rental forecasting, right? So if you kind of see the right numbers, then it gives you that confidence that rent is rising or stable in the area. It can help you plan exit strategy, right? Should you hold, should you refinance, or should you exit and sell? And then also doing risk assessment, identifying the declining market and avoiding problem area. So a couple of key points, right? So there are 4 kind of main categories. One is your real estate market numbers. There are national numbers, there's regional numbers, there's your local number. We recommend that you really stay on top of your local number. The national, regional, it's good to know, but local number trumps all. And then you have the interest rate. We always talk about interest rate. Interest rate is, I think, on top of most entrepreneurs' minds these days, because it has been quite elevated for quite a long time now. And the interest rate really dictates the activity, because it dictates the cost of money and the amount of money available for you as well. And then we want to look at some macroeconomic numbers, and ideally, if we can look at those economic numbers in your local market, that's great. What I find is some of these economic numbers are not really available in a lot of the local markets. They are available from a national standpoint, so it might require a lot of digging to get into those numbers in your local market. But just kind of good to know what the national market is doing. And then you have the delinquency and foreclosure data, right? Because that tells us how much distress is in your market. And based on that, it will kind of tell you what kind of inventory you're looking at, and do you have good negotiation for these distressed properties. So 4 categories. So let's talk about the first category. First category is the real estate market numbers. All right, we got a couple of these numbers here. You will find that you probably have seen this if you have participated in market update presentations before. And I also have an example here, just kind of put it all together, give you some concrete example of what this looks like. So the first number is the median home price. Okay, median home price is, the kind of the middle. Median means the middle of how much, what the house prices were, right? So that's, if the median is trending up, it means it's appreciating. If it trends down, it means it's going down, right? When you say correction underway, it means it's correcting. it's coming down. Correction underway is just a nice way to say it's coming down. Okay, so we look at that number. That's an important number. One of the most important number though is how many months of inventory. So a general rule of thumb is that if we're seeing less than 3 months of inventory, that means there's not a lot of not a lot of supply out there, right? Not a lot of housing supply. That means the seller have the upper hand, right? They have the negotiation power because there's more demand than supply. And vice versa, if there are over 6 months of supply, that means there's a lot of supply, not enough demand. Then if I'm buying, then I have more negotiation power. And if it's between 3 to 6 months, we call it a balanced market. That's the general rule of thumb. And then I also added active listings. So active listing usually is reflected through the months of inventory, right? So, but if you like to dig into the numbers, right, and see how it gets calculated, the months of inventory is calculated from the average of the last 12 months, or maybe not the average, excuse me, but it takes reference of the sales of the last 12 months. And so there is a piece of if the market has been stable, the months of inventory is a really good indicator of how everything is going. But if there's a sharp change in your market in the past 12 months, if you just look at the months of inventory, the number can get a little bit twisted. So if that's the case, I would want to look at the active listing number to give me a better understanding of, how it's doing. So this piece is a little more advanced. So if you're just kind of studying this, months of inventory is all you need to know. If you have been looking at these market data for a long time, then also look at the active listing. And again, it's more prominent, or it's more useful if the market has been moving a lot. There's a big shift in the market. Then you want to look at active listing, and the months of inventory is not the most accurate. Okay, I hope that summarizes it. Okay, and then you also have closed sale, which is what's the sales volume. So if we see a lot of sales happening, that means there's a lot of demand happening. There's a lot of demand. And if the sales volume has been going down, it's a weak demand. Right? And that's another way to say buyer's market or seller's market. If there's a high demand, that means that's a seller's market. Weak demand and supply being the same, right, then it's a buyer's market. Okay, another really big one is the days on market. It tells us how many days the house sits on the market. So if we see a low days on market, right, the houses just sit there, and they move really fast, that's a high demand. And if it has a high days on market, sits on the market for like 2 months, 6 months, not moving, a weak demand in the market. And the days on market is usually kind of the average of that particular market. So putting all that together, this is a screenshot of the Dallas Fort Worth market. They just they publish this, and they on a monthly basis. So all the graphics is all done right by the local MLS, and they have really good data. So here, just kind of interpret this information. The median price has gone down 2.7%. Okay. So what does that mean? Median price, it's kind of trending down comparing to last year, right? So it says correction underway, right? If we kind of follow that, right? So, but again, we gotta look at it every month through month to make that determination. And the active listing has gone up 14.2%. You can also see the months of inventory, right? It's 4.6 months of inventory. Last year, same time, 4.1. So there's been more inventory. These two numbers should be going in the same direction usually. And then you have closed sales. How many properties were closed? Well, increase in closed sales. That means a high demand. And then you have days on market, right? Days on market has actually gone up. So, here for this MLS, they break it down to how many days it sits on the market and then how many days it closed, right? So it takes 76 days on average to get under contract, and then it takes another 33 days. So if you have a property and you're going, well, I'm trying to sell it, well, it's gonna be the total between when you first list it to closing is 109 days, which is about 3.5 months, right? So something to kind of be mindful of. And of course, if you really want to kind of dive into that, you want to look at the neighborhood that the house is in, so you can really get a better idea of kind of the days on market, because there are certain pockets where the days on market historically in a particular subdivision or neighborhood is like less than 10 days, right? So that means even if the overall general market is not doing so well, and if the days on market in that area just kind of stays pretty steady, then that the flipping a house in that neighborhood, you're not going to hold on to that house for very long. It's going to move really fast. Okay, so to summarize, in general, buyer's market is when we see a rising inventory, increasing days on market, a common in price reductions, and that is usually a situation that's favorable to investors. Okay, you get better negotiation leverage. On the other hand, for a seller's market, right, you see low inventory, days on market is decreasing, right? So things are moving really fast, and they are appreciating. The price is appreciating. So for an investor, it's harder to negotiate. Everybody is fighting for the same deal. It's hard for you to get a good price and a good return. Okay, next, this is a second category, right? Why do we keep looking at the interest rate impact? Well, every 1% in rate change, there's a study that shows that there's a change of 5.5 million buyer qualification. So if the rate goes up by 1%, we lose 5.5 million buyers. And if vice versa, if it comes down, then we get more buyers. And then that's gonna drive up the demand. So some examples, right? So we have we follow these news, right? These are kind of real estate IQ news, and also the news that we follow from a interest rate standpoint. Recently there's a Fannie Mae, Freddie Mac, right, buying $200 billion in mortgage-backed bonds, and that pushed the mortgage rate below 6%, right? And then now we are seeing a surge in mortgage applications, right? There are more buyers entering the market. And also that leads to refinance as well. The refinance demand surged 40%. And you got homeowners want to lower the rate, right? If they bought a house or they took out a mortgage at a high interest rate, they want to refinance and lower the mortgage. Okay, next we have macro numbers, and by macro number I'm talking about economic job numbers, right? Employment, unemployment rates, population growth, and all that. So when do I really use these numbers? These are the numbers I use when I decide if I want to hold a property in a particular market. Then I would, do everything I can to kind of look up the employment trends and all that. Because if I'm buying a house and holding it, I'm looking at the appreciation power or the appreciation potential. If it cash flows, great. And if it appreciates and it cash flows, that's really fantastic. So that's what we like to look at. So so let's look at it. If employment, right? If if the job is growing in the area, that means there's a steady renters and also potentially more people relocating in the area. Okay, so these are some rule of thumbs, right? 2 to 3% growth means it's a healthy market. Vice versa, if we're looking at an employment rate of say above 6%, then it's kind of concerning because job loss means less people that are able to afford the rent. We also want to stay in touch with major employers and the development, right? If there are new job or new projects that has kind of long-term growth, right? That's favorable for the local market. Or if there's a major layoff or a employer is leaving, that means your future demand is gonna be weakening. So something to keep in mind of. The other one is population growth and migration. So if people are moving in, right, that means you have more new renters and home buyers in the area. If people are moving out, then your market is softening. There are moving companies that keeps track of the migration numbers. So I will usually go to I think companies like U-Haul, right? These are moving truck companies. They keep track of and publish these numbers on a regular basis, so you can see which market have more people moving in versus moving out. Okay, some examples. Okay, so this is from marketwatch.com. Okay, you can kind of see on a regular basis, they publish on a national basis, right? The jobless claims, employment report, unemployment rate, and all that. Just something to kind of stay on top of. Again, it's on a national level, right? On a kind of in your local area, you want to find resources that's going to tell you those numbers. All right, and then we also have delinquency and foreclosure numbers, right? If you have a lot of delinquency, all right, that means there's stress in the market. If there's low delinquency, the market is healthy. And then another thing to look at is foreclosure activities, where the volume indicate the amount of distressed inventory in the market. So let me show you an example. Okay, so you can go to FHA, single family loan performance, to see the delinquency numbers, right, on a national basis. You can also follow Real Estate IQ and kind of look at each metro area that we are already in, what the distressed seller leads look like. If we're not covering an area yet, you can request us to go there. We're always happy to serve clients in a new market. And then here you have Adam Data also publishes their foreclosure activity report by different states. So also something to stay on top of. And we keep track of these too. So if you just kind of stay on top of our website and our market updates, you'll get a hold of this data. Okay, next we got some advanced topic. Just a couple more slides. Okay, so we got a couple more minutes here. So let's look at market cycle and positioning. All right. So if the market is, so there's a market cycle in every real estate and in every local market. If the real estate is recovering, right, it's usually indicated by rising prices, low inventory. You probably want to take a screenshot or take notes here. Low inventory, tightening inventory, low days on market, and tightening inventory. Then you can, right strategy is to buy for appreciation, right? Buy and hold. In the expansion phase, right, which means things are, the market is growing. You're seeing peak prices, high competition, tightening supply. You can decide to sell it or hold it. We were talking about wealth building. Is that there's some strategy of just holding and never sell. buy, borrow, die. Something to kind of look into as well. But again, if you kind of want to play the market and be smart about the market, sometimes holding is not necessarily the smartest thing to do. I would say it's the most when we hold, it's the least thing. It's the most. If over time holding is the right decision, then it's less work, right? Just less work. You can focus on other things. Of course, there are times where you really want to sell and exit and just kind of pursue a different passion potentially. Then maybe selling is the right way to do it. So everybody is a little bit different. So these are just some strategic recommendations. Contraction, all right? Contraction phase. Prices is declining. Days on market is going up. Inventory going up. So you want to be selective, right? You want to find the right area, maybe the right pockets where you won't lose. And this is the low phase, right? The lowest phase. The low prices, high days of inventory, distressed inventory. For an investor in acquisition phase, right? This is actually not a bad area. You want to bad time. You can buy for value, which is what we usually do, right? We buy it at a distressed price, and we buy it for value. So what you want to do is to monitor the months of supply. Okay, most of the time, right? I talk about active listing numbers. Why that's important. But months of supply is just such an easy number to kind of look at and digest. So just a really quick way to decide how the market is doing. So the months of inventory is a really awesome number, and also looking at the pricing trend. So those are the two items that tells you what market cycle, what market phase you're in. And another recommendation is that counter cycle investing. You buy when other people are selling, right? When you're bold when other people are fearful, it beats timing the market. Some real life example, real world applications, right? If the month of inventory is more than 6, and it's high days on market, then it might be a good time to enter, right? To buy. If the rent growth is very strong, and the high prices, right, to buy is high, then we want to rent rather than sell. And if the price is at the top peak, low inventory, low days on market, and we don't see real estate as like a long-term wealth building, right? Just kind of want to make our cash and maybe exit and retire, right? You can consider exit window. And then very important is to kind of look at the market shifting. When the market is shifting, then we want to decide if we want to take action. So you want to watch for the months of inventory, right? Inflection means when it's changing, right? Going up and starting to trend down, or going down and starting to trend up. And that's a time to decide whether we want to take action. So a couple of key data sources, right? National Association of Realtors, your local MLS. This is the most reliable local data. Gives you real-time market activity too. You can go to Census Bureau to look at population trend and migration. And I also shared moving companies, right? Moving truck companies are a really good source to see how the population is moving. And then the Bureau of Labor gives you employment and consumer price index. You also want to stay on top of your local news for major employers and major employment numbers. And then HUD gives you delinquency numbers. And Zillow, Redfin, Realtor.com gives you the historical pricing trends. So these are all really good sources to stay on top of. Or you just join our weekly market update, and we keep track of these numbers for you. So some pitfalls, if you only rely on national numbers, don't do that. Local data is king, right? Months of inventory is the single most important metric. The 1 month snapshot doesn't give you the whole picture. I always do compare the last couple of months and also year over year. And if we are capable of, I like to look at it not just compared to last year, but the yearly trends like that. When we start kind of looking at the horizon, that gives us a much better idea of what the trend is doing, and a more complete view of how the market is doing. And then obviously everybody knows you don't buy at high and the market peak. You want to buy low and sell high. But sometimes when you're really shoulder deep, right? When you're really deep in the game and you're getting momentum, and you're seeing the pricing hitting momentum, that could cloud our judgment potentially. So one recommendation is have a regular kind of detach sometimes, take a vacation. Don't look at things for a while and then kind of come back to it. So the ability to kind of detach can give you a different perspective, or have a consultant, right? Somebody that kind of gives you that advice, and then use your judgment to gauge the advice. So summary, if we always want to know if it's a buyer's market, a seller's market, and you look at your real estate market numbers. And if you're actively doing deals, you also want to look at your local and neighborhood numbers, because it's very real estate is very micro, and also when you live somewhere, right, where you live, that house becomes the center of your universe, and so just when we're buying and selling properties, we want to make sure we keep that in mind, is kind of looking at that as the center of that person's universe in deciding what the numbers look like and what makes sense. So that's our market update training. I hope you learned something. If you have questions, feel free to ask. And let me share with you, because our time is limited today, there's also an opportunity for you to kind of dive into this deeper. Anything that you want to ask. There's there's office hour every week that we offer you. Now, before that, we have a promotion going on. How do we start 2026 right? Here you can inquire about the Valentine's Day promotion. Really good promotion happening, and so feel free to reach out. Scan the QR code to learn more. Okay, here's the QR code again. Much bigger, easier to scan. So we're gonna skip Q&A because our time is up. We're actually 1 minute over, but just kind of a couple of upcoming events that you should participate. Right, here are some upcoming events. We have 4 classes every week for you to learn more about deal finding, and then we have kind of 3 live events. We got Deal Makers Live, right? That's this current event. Tomorrow we have the office hours. So how to find deals, right? If you have questions on the sub 2 and the wrap, and how all that work, I can walk over in real time with you and kind of make sure you understand the concept. Same thing for market updates, right? Any kind of more detailed questions on a one-to-one basis, you can leverage the office hours. And then we have the open house, where we talk about the market opportunity we're seeing and how we plan to disrupt the market. There's also an in-person event in Dallas that's on February 20th. We call it the Deal Makers in Dallas, where we're looking for serious deal makers, right? That want to participate, network with serious players, and there's a really awesome setup event as well. So if you are actively doing deals right now, this is an event you don't want to miss. There's going to be a lot of folks out there that are big players. All right, that's everything we have today. Thanks for staying behind with us for the past couple minutes. And just want to congratulate you for staying the whole time, and make sure you are not just learning for knowledge sake. There's a time where it makes sense to start taking action. Maybe the time to take action is today. So I want to challenge you to take action and start your real estate journey. This is how you actually learn, is to kind of put getting in the game, right? Putting what you know into action. And you usually learn much better when you are taking action and honestly making mistakes. Don't be afraid of making mistakes. The lessons are usually learned through mistakes. All right, thank you everybody, and look forward to seeing you again next week, and have a great rest of the weekend.